The dollar yen has been soaring in a bull trend for a significant period. November 2011 was the exact low of that move on this chart at $75, and we are now at $149. So the value of the dollar has doubled against the yen in a period of 13 years. Now, we had a previous peak up here at 152.00 when the Bank of Japan last intervened. If you don't understand what that means, central banks keep an eye on their currencies, and they sometimes don't like them to fluctuate too wildly. Now, I think the Bank of Japan has been quite happy to see the value of the yen drop because they're trying to stimulate the economy. A lower yen makes their exports cheaper to the rest of the world. It's getting to the stage now where they have expressed concern about the weakness of the yen. Around 150 seems to be a sort of line that the Bank of Japan may intervene. So they physically go into the market with their currency reserves and they buy the yen and they sell the dollar, and they create this move to punish speculators who are pushing the yen down. So it's a warning. They can move markets with the amount of currency reserves that they have. So we're in this odd situation where we're in a bull trend. I'm not keen on getting into long positions because I'm obviously concerned that the Bank of Japan will step in. Having said that, I'm going to do some analysis and see what I can figure out for you. This is a big swing low here, and I'm going to isolate that. I'm going to throw some fib levels on there and see what I can get. I could actually take this low here. Why? So, although this is the actual swing low of the move, it was really this point at which the market started to significantly properly recover. We actually saw a good move. So I'm actually going to take that swing low there. This looks pretty good. 23.6% fib is kind of catching those swing highs up there. The 38.2% fib is catching that swing low. So is the 50. So that actually does look good. I like the fact that the 500-day moving average is coinciding with the 38.2% fib. I want to draw some trend lines. And when I look at the 1 hour chart, I can see in the trend line from this low here to this low here. Yeah, that's exactly where it should be. So you can see that that trend line's been broken. So that's giving me a negative bias already. On the 1 hour chart, we've broken the 50, the 100, and the 200-hour moving averages. 500-hour moving average has worked perfectly as a support level, but I wonder if this is going to turn into a head and shoulders pattern. So this could be the shoulder, the head, and this could be a right shoulder. I want to see something a bit bigger. I'd really like to see it move up to the 100-hour moving average at least. But anyway, the point being, it does look like there is a potential trend change here, and a break below the 500-hour moving average, which coincides with this trend line here around 149.50. That would indicate we have a potentially more substantial move to the downside. Okay, we can go back to the 4 hour chart now. Interesting to note that we're oversold on the 4 hour chart. Now, we have not spent much time in oversold territory historically on the 4 hour chart. Why is that? Because we've been in a bull trend. Every time we dip, we bounce quickly from oversold territory. If you'd recognize the fact that we are in a bull trend and your strategy was lazy, I can't be bothered to monitor the moving averages, I can't be bothered to put my trend lines on, all I'm going to do is every time we hit the oversold line on slow stochastic, I'm just going to buy it. How well that strategy would have done on several occasions. So the question now is, should I be buying aggressively on that basis, or is there a risk that we will now start to spend more time in oversold territory because there is a trend change? So that's something I'm going to be keeping an eye on. Theoretically, we should now bounce off this support level and we should soar